In this lesson, we will already start looking at the trading tools. Like, first of all, we're going to look at the charting tools, at the charts. We're not going to go to the exchange because, in the same way, like when you're learning how to drive a car, you don't learn by sitting in a car and just like, hit or miss, but you actually take some lessons like how drive. So you learn how to use the tools. So that's why we will learn in this lesson how to use the tools for trading, not trading itself. So you can get to the site TradingView, which is our recommended site for charting, where you're going to be doing your analysis and calculations. And you can use the link you will find in this lesson to register there. If for some reason you decide not to use the link, I believe that in this part of the site, there will be like a blue button telling sign up for free or start a free trial, something like that. It's going to be placed here. Now, what you're going to do, you're going to just click here on the chart. I'm going to do something slightly different because I already have registration there and different layouts, but you just click on the chart button and you will see something like this. Now, let me clear the chart for everything which is not essential now. Okay, so now let's start from the top, from left to the right. So right here, you have a symbol search. So that means it's symbol, or you can use the name ticker for the cryptocurrency. So for very beginning, let's just focus on BTC, USDT. That means that's Bitcoin traded towards Tether, US, or Ethereum, USDT. So you can just like write down like one of these two names to get on the chart. If you're interested in any other cryptocurrency, just put it into Google and type there like, I don't know, Litecoin ticker, and it's going to show you that Litecoin is actually LTC, and you can always compare it to USDT. So here you can choose which currency you want to trade. And on the right side, you have the exchange of the chart, because each exchange has like a little bit different data for each currency. So it's very good to use the one which you're going to be actually using. So for example, we're using FTX right now. So I'm going to go on that chart. So each time you want to change this, you just click in here and you write the different ticker. Sorry. Now, let's move on. The time frames. So it's this section. Probably you're going to have less than what you see in here that I have. I already like added some more. Basically, what this represents is 1 unit of the time on the chart, which is going to 1 block. We're going to learn that this 1 block is actually 1 candle, and this time frame represents what does the block, the candle, represent as well. So for example, if I click on 5 minutes, each of these little colorful blocks you can see in here, that's 5 minutes. Like, so let me just draw it for you. So for example, if we start here and we take this 1, 2, 3, 4, 5, 6 candles, let me move this away. So, and each one represents 5 minutes. That means that this period is 25 minutes. Now let me delete that and choose a different time frame. This is a daily time frame. So in this case, each of these blocks of these candles represents 1 day. So the bigger time frame sort of gives us like bigger perspective. So you will see like 1 block just appearing once a day. Like, while when we were on 5-minute chart, then each block represented just 5 minutes of the price action, how the price moved in that given period. And of course, if you go to 1 hour, you will see each block representing 1 hour. So I believe this is quite clear and simple. Now, let's learn more about these so-called blocks, like I called them, or they're actually called candles. So let's get to that. Okay, so now let's get to these, how I called it blocks, but it's actually called candlesticks, Japanese candlesticks. And we're going to be using mostly these, almost exclusively these, during our course. So let me explain, what do these candles mean? Like, just like I explained in the time frame section few seconds ago, like each of these candles represents one period of time. In this case, it's 1 hour. So 1 hour, 2 hour, 3 hours. And what does these candles tells us? So let me draw into the chart a little bit. So if it's a red candle, that means that since the open of the candle of the hour as well till the close of the hour and of the candle, because we're using 1 hour chart, as we can see in here, the price went lower. So this seems to be that the price, this is going to be like 12. So we can estimate that this was actually between 9 and 10 a.m. And that means that at 9 a.m. price was here and then it closed lower. So the price was right below 214, which we can see in here. That's the price. And it closed at 211 dot numbers. So this is why the candle is red, while when the candle is green, like you can see here, that means that at the beginning of this hour, the candle opened in here and closed at the higher price. So it opened somewhere here. If here is 202, so that means like 201 or something, and it closed about 204. So if the price closes lower at the end of the hour compared to the beginning of the hour, we have a red candle. If it closes higher from the beginning of the hour till the end of the hour, we get a green candle. So this should be pretty clear right now. And what does these like little sticks or lines and the candles and these blocks means? Let's get to that right now. So we already learned blocks of they're called bodies. So let's call it bodies from now on. The blocks are called bodies. So these bodies represent the overall move of the price from the open. So that means this candle opened here because it's a green candle. So it opened lower and it closed higher. So this is the move that the candle actually made in those 60 minutes. That's represented by the block. But what is this line in here? This line is actually called a wick. We call them wicks. So let me repeat that. This is a body. The block is a body and the line is a wick. So this is how I'm going to be referring to it from now on. And this wick, let me move this painting a little bit away, represents during this hour, the price went in here, but failed to hold there and then moved higher here. So the wick represents where the price went compared to open of the candle in this case, but didn't manage to hold the price and went back up in here. So this is why this is represented by a wick. And we will learn in the next lessons that the wick represents that, hey, they tried to push price here, but it was refused and it went higher. So this tells us this price was really refused by the market, or it was taken as a very good price to buy. So that's why. And it can go in both directions. Like you can see this candle, the red candle was right here at the beginning of the hour. Then during that hour, during that period of that hour, the wick tells us that the price went higher. It went all the way here. Here it was too high, so people started selling and closed lower because it's a red candle. So this is the close. So these wick represents Where did the price moved but failed to hold compare to the open and the close of the candle? So I hope it's pretty straightforward by now. And let me show you the other kind. Okay, so now we know about the traditional Japanese candlesticks. But let me show you just so that you can see that some other types of how chart can look. You can also use the line chart where you just have each break of this line represents the time frame. So 1 hour, we're still on the 1 hour chart, and each break represents 1 hour. Or as you're moving your mouse cursor, it automatically jumps hour by hour. So you can see just the line, where was the price at the end of the hour. It doesn't tell you if during that hour the price went up here and then ended up here or lower here and went back. So this is just like very, very basic representation of the price. So this is the line chart. I don't think there's anything more to explain about this. And then also let me show you these Heikenashi candles, which are kind of visually similar to the Japanese candlesticks, but they get colored also based on the momentum of the price. So if the price is significantly rising, you get like only green candles. And in the same way, if the price is dropping, you get mostly red candles. So these are Heikenashi candles. They don't tell you so well what happened during that hour, but they represent the trends, the momentum that the price moves way better. Because with the traditional candles, let me just switch it so that you can see the difference. Let's focus on this area. We're going to look at this area. So traditional, and you can see that we have a red candle in here, red candle in here. So, and if you switch to Heikenashi candles, you have it all smoothed out into one green move because it was significant up move by move. So these are the Heikenashi candles, which are good for setting of the trend. And now let me also show you some basic drawing tools on the chart, which you can use to draw something for your homework or so on. So you can go to the left side of the screen, and from the top, it's 1, 2, 3, 4. And here you have like this little icon of the paintbrush. So when you click on it, you can just mark whatever on the chart. So this is pretty useful tool. You can be making like little arrows here, like circling some setups or whatever you want to use it for. Or another one, very useful tool, which we're going to be using a lot, is you click on this arrow right here next to the brush, and you will choose here rectangle. And then this helps you. You can use it to draw the rectangles on the chart. So, which is very useful. You can highlight some area that you're looking at, or you can highlight some structure or some move, which is also going to be helpful for your analysis and your homework. Or, I don't know if you heard about it, but very important part of the trading is support and resistance. And we're also going to be using these rectangles to mark those. Okay, so I hope it's like pretty clear for now. And let me show you the most fundamental and very important part of the chart analysis called impulsive and corrective move. Okay, and now when you do know what the candlesticks mean, let me teach you the fundamentals of the technical analysis, and that is impulsive and corrective move. So let me show you on the chart what do I actually mean by impulsive and corrective move. So let's go a little back. Okay, here we go. And I will mark it on the chart for you. And while I'm marking it, I'm going to explain you what does it actually mean. So basically, on the market, there are big players and smaller players, like retail players, like traders like you and me. And we want to follow what the big players are doing on the market. And by learning this kind of analysis, impulsive and corrective move, you will be able to actually figure out what are the institutions doing in the markets right now. So let me just finish this. And the first move we're going to talk about is going to be the one which is usually caused by institutions. And that is impulsive move. So what does this impulsive move actually means? Impulsive move means that mostly we have candles of one color. So therefore you can see that, green candle, green, 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 we have copper red, green, and we keep going. So mostly it's very one-sided move. So that means the move is going with great power and there's almost no resistance. Number two, there are quite big candles in this move. Like if you compare these candles in here, they're quite small compared to this candle. So one of the characteristics of the impulsive move is big candles, and you don't have a lot of wicks in the other direction than is the move. So if we have the move upwards, you don't get a lot of wicks, price going higher and then coming back. You don't get it too much. Look, like all of these candles, 1, 2, 3, 4, 5, they're mostly closing right at the top of the candle. So the price never went up and got refused too much. And when that starts to happen, usually it's the end of the impulsive move. Like here, we have a wick and the move sort of ended. Also in here, big candles, a wick, and the move ended, and something similar in here. So that was characteristic number 3. And characteristic number 4 is that the candles, they don't overlap. You have very small overlaps. So that means like this candle ends here and the other candle is not overlapping too much. It just keeps moving, keeps moving. In here, you can see that it's just like going from left to right, like the candles are basically horizontally one next to each other. This is very vertical, so there's very little overlap. And what this overlap tells us is that there is very, very strong momentum going in one direction. And it doesn't have to be just like in direction up. Like we can get like impulsive move. Of course, all of these analysis can work in both ways. So probably if you are listening by now, you should notice that there's impulsive move somewhere here. And we got another one going from here to here. And what is the other type of the move? The one which is mostly caused by the retail. So let me mark that on the chart as well. And let me make these red. So I'm going to mark them red. Here we go. And one more in here. And these are corrective moves. So corrective moves usually have smaller candles. You can see that the candles are smaller. If I compare these candles compared to this one, or even like this one, this huge candles here, they're very small. They're both colors. So that means there's indecision. 1 5 minute goes down, another 5 minutes go up, red, green. So it's like indecision. Like we don't know who's like winning in here. Here we can see that the buyers are winning, the ones who want to buy. And on the downtrend, we can see that there's more red. Like those are sort of like having more pressure in the market. In here, we don't know. It's like very small candles and it keeps changing from one color to another. So, and usually also the candles have like wicks to both sides. So you can see like there's a big wick in this direction, then there are wicks in this direction. So there are corrective moves have like wicks to both sides usually. and big wicks. And one last thing, there's a big overlap. That's what we are saying. So there's almost no momentum. Like this candle completely overlaps this one. So it's very horizontal. So that's another characteristic of a corrective move. And this is like fundamentals of your analysis, like to learn doing this. So please take your time and practice on the chart learning this. And also, let me tell you, it's very also important to, I'm trying to move my chart here. It just keeps jumping around. It's very important also for trend setting. You know, when we will be learning about like trading with the trend, probably you heard about it already, that trend is your friend and you want to trade in direction of the trend. Well, the impulsive moves help you define what is the trend direction. So basically, we have like impulsive move up. So that means we're in the uptrend. And usually at like 66% of the time, almost 70% of the time, the correction, so this correction is going to continue with another impulsive move in the same direction like we got into the correction. So this is a correction, and to this correction, we got with this impulsive move up. That means buying or long. Then we have a correction, and we continue up. And then we have another correction that also continues up. And then it goes like sideways for a long time. But mostly, it's going to continue in the direction of the previous corrective move. So please practice it, keep practicing it, because this skill sort of takes a lot of practice to get good at. And it's also a little bit subjective. So please practice and send a screenshot to the group, because somebody could say like, hey, this is like one big correction. And then some other person would say like, hey, but this is like impulsive move. So it's very subjective. That's why you need to train it, because it's not going to be like, it seems quite obvious to me when I traded this for a long time. But for you, it might be a little bit confusing. So that's why take screenshots, send it to the group, and get feedback. So we will be able to help you learn this kind of analysis, and also accept that there are sometimes like times of uncertainty where you can't really define like, is this impulsive move? Is this corrective? You don't have to know all the time. Sometimes the charts are just mess. And that's completely okay. We don't have to trade like every single move. We are just looking for the very good ones to trade. So if you're not sure, like, what is this? Is this impulsive corrective? Then just like skip it from the beginning. Like, okay, I don't know what it is, so I'm just going to skip it. And I'm going to wait until I know. Like, okay, I'm not sure what this is, but this is impulsive move. So this could be tradable. So yeah, I guess this is it. Like all the important information. Keep practicing, keep getting feedback, stay involved, and you will get great at this. And I'm looking forward to talking to you in next lesson.